an intensive like trade review, not trade review actually, because on the last video I posted, we talked slightly on where we think the market is likely going to go, what we believe. But this one is just going to be more intense, more in depth, and please like, subscribe, follow whatever language they do use on YouTube. I am actually taking my YouTube content more seriously now. So let's dive straight into it. Now, when you're looking at the marketplace or when you're looking at trading in general, one thing I believe as a trader or as somebody who aspires to be like trader, because I actually suffered or I made this mistake a while, is it is good or it is better to focus on one asset, one strategy, one market. Now that will do you much more better than diving into multiple markets and whatnot. No, so I've been trading, I did trade USD JPY, GBP JPY. I traded gold, I traded all the markets, and then I started trading NASDAQ. And then when my strategy in ICT, smart money concept, I got to understand that I am much more better, or I trade much better whenever I'm trading the NASDAQ. And that is because that over time I understood that I can actually trade this thing much better and make much money, more money, doing less than trading GBP JPY, USD JPY, and wasting my time and effort. So went along and I started studying more about the Nasdaq and diving deeper into it. And then I got to see that okay, this is much more better and much more efficient than what I assumed or what I presumed. So I spent a lot of time in it and I dedicated myself and time and energy into it, and it's been 1.5 years of consistently trying to learn and understand the Nasdaq. So this is FP markets. Like I said on the previous video, I use different brokers. Now I use different brokers. I use Pepperstone. I use, like, you can look at the top corner. I use FP markets. I use capital.com. I use and I use GBE brokers. Now for the one I recommend the most is I prefer you using GBE brokers because that gives you the Sunday opening price. Okay, and that gives you the Sunday opening price, because what that does is that it lets you see the Sunday opening, the Sunday low, the Sunday close, and just like that, that's what it does. Now there are price discrepancy in these brokers because sometimes you might not be having the accurate data, and that's one thing with trading CFDs on a free channel like on TradingView. For instance, if you look at GB brokers, we're seeing price taking inside this, we've not really reached here. But if you look at FP, um if you look at FP markets, you see that we're really already inside. So these price deliveries and discrepancies are sometimes there when trading, like when trading CFDs. So um whenever we're looking at NASDAQ, because I only trade NASDAQ, I do not trade any other thing apart from NASDAQ. Whenever you're looking at NASDAQ, it's basically looking at what are we looking at this week, what are we trading for this week, what is our target for this week. Okay, see, and also please remember to like, subscribe, share, and also remember that this is for educational purposes only. Please, this is for educational purposes only. So on FP markets, we're having, or actually inside this inversion fair value gap, but on the GB brokers, we're not inside it. Now I like to use the GB brokers because it gives me a more clear, refined, and like I said, it gives the Sunday opening price. So with price moving higher, okay, with price moving higher, well, we had Wednesday, Thursday, Friday. Now within last week, we had Friday, we had a gap, we had Monday, Tuesday, Wednesday. Now we had this run up in price, we had a displacement up. Now, where are we targeting? I think we're targeting this high, okay? Because on GB brokers, we see that we have not really traded into that inversion fair value gap, okay? So there's a discrepancy. There's an imbalance in price action there. So there's an imbalance in price action whereby the price is actually not materialized to a specific price point, and they are pending orders that needs to be like taken. So it happens in some brokers whereby sometimes price will be like, I'm filled this order in this broker, but on this other broker I have not filled that order. So sometimes it will come back, and it's just that kind of thing. So that's what I'm looking at. So why most of you can see it on my tab, I'm looking at GB brokers, and I'm seeing that we haven't really tapped into that inversion fair value gap, which actually it's marked here. So I have it marked here. So we have this inversion fair value gap, and the purpose of this inversion fair value gap is to actually take out a low. Okay, is to actually take out a low. That's mostly the purpose of an inversion fair value gap. And again, if you look closely, we have series of up close candles, which is in the form of a breaker. Okay, and sometimes the breaker is mostly traded 72%, 80%. If it goes deep in a bearish breaker, it's 72, 80% level. Now these are all advanced concepts, and I do not expect you to, for those of you watching the video. So if you look at that, I'm looking at 72 into 0.8, 0.72, 0.82. So I'm looking for price getting into that level. So looking at GB brokers, you see that it's not really inside of that inversion fair value gap. Okay, we're not really inside of that inversion fair value gap. So while we're waiting, I think, or I believe that price is actually running, because if we're looking at if we're looking at if we're looking at um NASDAQ now, on the 1 week time frame, we see this inversion fair value gap. Okay, we see this inversion fair value gap from this low to this low, from this candles open, from this candles body to this one. We see this inversion fair value gap, and we can actually see that I'm taking everything, because there's a volume imbalance here, there is an inversion gap here, and so I'm encapsulating everything, this entire range. So I'm dealing with this entire range. So we can actually see that we traded down, we traded, like on the previous video that I actually explained the loss of this thing. Then we traded through it, and then we displaced higher, we traded above it, and this is just the intel like main focus on this, because on the previous video we dabbled a little bit here and back and forth, but on this one we're diving in straight to price action. So we traded down, then we traded back up, and then we closed above it. Now closing above it, the next thing is treat it as an inversion favor gap. Most of you are familiar with this concept. So we had equal lows resting here, we dropped down, traded, take out equal lows, and then this stays outside. Now I would like to see it stay inside. Now if it stays inside this whole gray area, then the odds of it going above these targets to this high is higher. So this is what I mean. Now, and also we have 1, we have 2, and then there's likely to going to be a third one. Okay, likely going to be the third one. And if you look at this bearish candle, we have the opening price, and this should be Monday 3rd November 2025 opening price. So we have this candle's opening price to be dealt with, to be traded into. So have that, know that on your books. So we have 1, we have 2, we should be having like a third high. Okay, now with last week trading downwards, we see it stays inside. Okay, now price staying inside is the signal that, okay, yes, we're staying inside this level of inefficiency, while we're encapsulating, or we're including all these inefficiencies, that we're including this volume imbalance, we're including the fair value gap, we're including every inefficiency here, because we have 1, we have 2, then we have 3. We have 3 grades of inefficiency resting there. So we're encapsulating, or we're joining everything together and making it as one. That is what is gray. So we're just going to make this box like just main inn, inefficiency, main in. So we're just going to target like that. Let's make it black color. So we're just going to make it as main inefficiency, because we if I choose to start marking out all the inefficiencies, my chart is just going to be too crowded, and I really do not want that. So I'm just making it main inefficiency, and in that way we have a much more clearer and neat perspective. So I'm taking away these lines. So we have this main inefficiency, and then what happened? We traded through it. We traded below it. Now this week is not supposed to happen, but it happened, and then we had a rejection. We went back, and then we closed above it. Okay, so closing above it means we treat this as an inversion inefficiency. So the next thing was we traded into it. Now we're stopping. Now this stop in itself is proof that, okay, yes, we're stopping here, and then we're likely going to go higher, targeting this opening. So that's our target. So we're going to write that down, that we're looking to target, like on the previous video that I showed, that I sent a few minutes back. We're looking to target, let's say 25,907. Because of price discrepancy, we're saying 25,907.08. So we're stopping inside here. So on last week price action, we're stopping inside this mini. We did not go lower. Remember, we did not go lower. We stayed inside, and then we started showing a sign of bullish. So let's go over to daily time frame to see how we can enter for going long or buying to target 25,907.08 as buy side liquidity. So now we have this main inefficiency. Now we traded down into the lower portion. Then we're rejecting on Friday. On Friday, we're rejecting. Now let's see. We're rejecting. I still believe we're going to trade. I still believe we're going to trade higher. I think we're going to take above this high. But let's not project yet. So on the 1 hour time frame, we're looking for a place where we have inefficiency. Okay, so while we're having price stopping here, we're having this displacement, we're having retracement, we're having another displacement, we're having like a trend, we're having like an accumulation. Okay, you see that we're having like an accumulation phase, like a range. The next objective would be to, for a lot of traders who would have bought their position here, their stop loss protected would be below this level. If not below this level, somewhere within here. If not below this bullish candle. Okay, and if you look closely, we're seeing an inversion fair value gap. Okay, so and also on the weekly time frame, remember that since we're being bullish, we might actually trade below the opening price. So we're seeing this inversion fair value gap here. Okay, so this is a cheap discount re-entry for low risk entry. Okay, so low risk entry. Let's go back to the 1 week time frame. So we're doing like a top-down analysis from the weekly to the daily to the 1 hour and whatnot. So we're having the weekly time frame. So let's see. Remember, we are in the formation of a swing low. We're forming a swing low. What I mean by that is that we're having this low here, and then we have another low here. Now we might be expecting another low here, so we will be creating something like this. We'll be creating something like this, this, this. So we're calling this our swing low. Okay, so that's what I think we're actually likely go to. There are situations where there are possibilities of me being wrong, probably, but this is just my insight to what I think that I would be doing within next week and where I'll be looking at price going. Okay, so on this time frame, I'm having an interest on this gray box because on the 1 hour time frame, For a low risk entry, that is discount entry, which might fall deeply at 0.8, 0.85, very cheap. Let's see, we're having, okay, this is 0.85, 0.8. Now it might drop down a little bit below 0.85 and then start going back up. So for anybody who would have bought on this breakout, their stop loss protected would be on this level, and on this level we have two relatively equal lows. So this is a sell target, just to note it, so we just got to be careful. So this is equal. If we go over to the 15-minute time frame, we'll actually see that that is relatively equal. And one thing I know about NASDAQ, I've been trading for a while, once it's equal, once it looks juicy and sweet, yeah, it's going to run towards it. So see this as equal, very within this low and this low, this is so equal. And then we have this inversion fair value gap, and then again we have a breaker. We have one, two, a breaker, and then what again, we have this inversion fair value gap as well. So we have a lot of things waiting under this area to see price go. Now it can be wicked enough to want to drop down further, probably take out this low. The odds are high. uh, these drivers might be news events that might cause it to happen, but whatever the narrative or whatever happens is that we are being bullish until we take over 25907.08. So that's our run on buy side liquidity. So that's our run on target. And overall structure, overall targets that I'm actually looking at is I'm looking at two senior situations. I'm looking at the high buy side, and I'm looking at sell side down here. So whatever the market want to offer me within the week, I would take. I would not project my plan upon the market because it might change its hand. So day by day, whatever the market shows me, that is what I am going to be trading alongside with, having my narrative at the back of my mind. So I do not take my narrative and then go into the market and then start trading that narrative. I wait for the market to tip its hand, show me that okay, I'm likely going to do this at this certain time, and then I have, if what it's showing me supports my narrative or the story that I'm painting, then I would likely go for it. So this is just my target, and I'm having a target on this high, and then I'm having a target on this low. So these are my two main targets. So let's get rid of all the lipsticks, and I'm having a target on this high, and then I'm having a target on this low, and either of these range are going to get swept next week. I can assure you that, because we have a lot of news drivers. So we're having buy side and we're having sell side, and we have this trend line kind of thing. We have this level. So anybody who would have had their position long here would have their stop loss protected here. Anybody who would have had their short positions here would have their stop loss protected here. So in this disaster which is building up, I'm having the interest to want to buy it till it gets here, and having the interest to want to sell till it gets here. So while I'm having two interests, whatever the market trades and however it trades, it's left for it. Now, going to the daily, I see Friday rejecting. Friday rejecting is not the problem, but why is it rejecting three times? So I have a 1, I have a 2, I have a 3. Okay, so there's a possibility that it rejecting in that way, it's likely telling me something. Whatever the week presents, we will actually trade in that direction. But for now, we're waiting, and we're really going to be waiting, because Wednesday we're having some heavy driver news, and whatever the market presents at that time, we will. But remember, whenever price is equal at a certain point, it is good for the taking. So till next time, and I've actually dropped 2 videos for today, so like, subscribe, and follow, share, whatever you gotta do to make this thing reach to somebody. And I would be posting more educational content like this, and just NASDAQ. And till next time, have a great time.